love the channel and find it useful in becoming a happy retiree. Subscribe today. Greg, good morning. What's going on? How can I help?
Morning, Wes. I appreciate you taking my call. I just had a general question. It's not really specific about any one area or sector, but I keep seeing on different websites and getting emails about people that say that there's a correction that's imminent. You know, we've been in a bull market for quite a while now, and I keep seeing these messages, get your money out of the stock market by Monday, and the correction's imminent. I just wanted to get your opinion on that and see what you think.
Well, to some extent, they're right, Greg, because there's always a correction around the corner. And so these newsletters and these scare tactics, they're not wrong. They just don't have any sort of timing mechanism or crystal ball that's any better than yours or mine. Right. And the fact that somebody would say, you know, look, by the end of the week or by Monday, this event's going to happen, and that's when things are going to crash. The newsletter business is a pretty interesting one, where the business model is pretty simple. They can continue to say the same thing over and over and over again, and eventually they're right.
Yes.
They're right. So they're not timing the market. They're saying the same thing. And then as soon as there is a correction, they say, well, we warned you last Thursday that this Wednesday there was going to be a correction. And look, there was. And then they start to draw you in. They say, look how we've done. Mm-hmm. And it really is just a big network of, I hate to say these things are scams, because they do have research. They do have smart people that work on these teams. And so I don't want to call them scams, Greg, but whenever you have somebody or some newsletter or some company or an organization or newsletter company telling you that X is going to happen on X date, there's no accountability for them. There's no accountability whatsoever, because they continue on, and then the last newsletter is gone and they publish something new. And eventually when they're right, they get you to sign up for a newsletter, $100 a month, paying $1,200 a year for what in real life is just a lot. A lot of times it's just gibberish. So
your show every week, and I've never heard you say, you know, all the signs are pointing to an imminent correction. I mean, I know that it's coming. It's going to happen. It's cyclical, and it's going to happen sooner or later. But
you got to remember too, Greg. Here's the problem with saying that, is that at any given point, so the markets have these tremendous tides, and meaning that the tide is an unshakable force that comes in and comes out every day, and that tide is the underlying economy and what companies earn. And that tide right now is very strong to the upside. But what is also difficult to forecast in markets is the layer of emotion that creates. If you think about a cappuccino, you've got your coffee, right? And then you've got this giant layer, or let's call it a latte, of foamy milk. And that foamy milk is our emotion. And in any given day, markets, just through how we're feeling as an economy and a country, be 10, 15, 20% overvalued from what companies are really worth. Or when we're feeling nervous and scared and the pendulum is towards fear, we can be down 10, 15, 20%, again, all through emotion. So it's a remarkable entity, this $17-18 trillion stock market, or $20 trillion stock market, that has a 40%, I just gave you 40% swing here, Greg. Right. 20% over because of emotion. We could be 20% under valued because of emotion. So we've got to understand that in that pendulum of fear and greed and a human emotion, what really matters is the fundamental layer of how companies are doing. And that's what I try to bring to you, to our listeners here on Sundays, is an objective view of, hey, here's how the economy is going. There are hundreds of economic data points. There's probably 3 or 4 dozen that really matter. It's a symphony of data, not a single point. And then you've got collectively how are companies doing. The S&P 500, that's what matters, earnings. 97 have reported already this season. We're going to get another over almost 200 this coming week. And as long as earnings are growing, then the underlying tide of the market is relatively strong. If things get really nerve-wracking and I feel like we're going into another 2007 Great Recession, world's going to fall apart, believe me, I'll bring it to you here. But it's not going to be that, on Monday I think we're going to crash by 20%, because nobody knows that. And you've got to look at these markets as longer term fundamental marathons that you're in the race and you want to stay on course as long as you possibly can through rain and shine, and you don't get off the course and you don't take a rest unless you think something really, really bad is going to happen. And if that comes up, believe me, I'll be the first to share it here. But for the meantime, we're in an economy that's chugging along. Earnings are doing well. Doesn't mean that our human emotions can't change and we could go down by 10 or 15% at the drop of a hat. But just because we drop by 10 or 15% doesn't mean the market's broken. It might need a rest. It may need a pause. It may need a refresh. Right. But fundamentally, the best investors that have made the most amount of money have figured out a way to stay invested in some shape or form. And it's not going to be the same for everybody. We all have our own different risk parameters and our own asset allocation that really matters. But as long as we can stick to that fundamentally and feel comfortable, that's what will have you win the race. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.